Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Stoxx. Today is the 26th of September 2018, so welcome everyone. Welcome to this Wednesday's morning session where we're going to have a look at a few instruments I believe are quite important. But before we do that, let's quickly, as always, let's read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so let's jump into the charts. Now the first one I want to touch on, and that's the Stoxx 50. Now Stoxx 50 here, looking at this daily chart, we can see that it continues to have a nice run since its reversal here around the 10th of September. This index continued to push higher. Yesterday we saw just a bit of correction here back to the downside, sorry, I do apologize. On Monday we saw a bit of correction back to the downside here, where it met its good area of support near the 3410 area, so around the 3405, something like that, in between those lines. And of course now we're seeing this candle, this yesterday's candle, closing in the positive zone. So it seems like, to be honest, the bulls are not ready to give up the fight here, and would continue continue pushing higher, and we could see further acceleration here towards the 3460 level. Now this level here was marked by the highs that we saw around the 28th of August, and also, as you can see here, in the past it acted as a very good area of support around the 2nd of August and also the 25th of July. So a good potential level to watch, especially also given the fact that we do have this downside resistance line taken from the peak of the 23rd of January. Now this could act as a nice magnet as well. So basically, guys, we could see further continuation here to the upside, and if we do get a test of this 3460 level, a nice good break and a close above that could end up pushing the index higher a little bit towards this this downside resistance line. And of course, until that line is broken, we'll kind of have to stick to the downside, to be honest. But probably the best case here, the best scenario to do is if, let's say, if the index travels all the way here towards this one, keep your eyes on it and be very cautious, because we could see maybe a break here. And if we do get a nice break above this level, above this downside resistance line, well, it could be opening the path towards even higher levels like 3510 or even the 3540 last time seen here, acting as very good area of resistance on the 31st of July and the around the 15th of June. So this is of course if we see a break here above this downside resistance line, but that's of course still a big way to go. For now, from the shorter term perspective, keep your eyes on these two levels, guys. So let me just actually adjust this slightly, because it kind of dropped a little bit lower, so it's no longer the 3410, it's going to be 3405, and even though it's just a few points, nevertheless it's quite an important level now to watch. So if we do get a reversal here and we do get a break below that level, below the 3405, well, watch out for a possible move back down here towards the towards this level right here, the 3345. This could be a nice potential area for support, and if that doesn't hold, well, further declines could be possible. But for now, from the very short term perspective, you could in a way look at the upside, and especially if we get a nice break here above the 34.35 area, approximately there. If we do get a nice close here above that, then yep, we could start aiming for this 34.60, or even, like I said, or even higher towards this downside resistance line. So for now, be very careful. Certainly, like I said, at the moment it continues to look well, it continues to be more to the bullish side, but nevertheless, like I said, stay sharp and keep your eyes on this level here as well, on the 34.05. Let's jump into one commodity quickly, and that's WTI. Now WTI here, looking at this daily chart, you can see it's having a nice run right now, so we can probably lift this little key important area a little bit higher here to highlight the importance of this next good area of support, which actually could play out now. So the 71.65 now, it could be the one to watch, because if we do get a nice break here below the 71.65, we could see a bit of retracement maybe to the downside here. Actually, let's get rid of this line. This line is no longer valid. Now this is the one to watch, and that's approximately around the 70 mark. So the nice good round 70 level, this could be a nice area to watch. It could be a nice bouncing ground for the commodity. But again, like I said, for this scenario, for this, as you can see by the arrow here, for this scenario, for us to see this scenario, we need to see a good close here below the 71.65, and this way we could maybe potentially see something like this happening, where the commodity would travel a little bit lower, hit the 70 level, potentially, of course, and or at the same time also test the short-term upside support line taken from the 16th of August. Now, could this basically two of these could play out, could go into effect, and we could see the bulls jumping back in here and potentially driving this commodity higher, and this is where we could start aiming for the 74.90 level, marked here by near the highs that we saw around July time. So yep, some good levels here for us to, let's say, get comfortable with the downside scenario. Well, again, we would need to see a nice good close here below this upside support line, and specifically this 70 level, because this is where we could start aiming for the 66.95 level. So something like this could be possible, of course. This is a very kind of, to be honest, straightforward analysis here. Just to kind of quickly mention one thing here as well. If, let's say, the break here never happens, the 71.65 continues to hold, well, I mean, we could see straight away bounce here off of this level and another potential push higher, which could get confirmed if we get a break here above the 72.70 level, so approximately there. So something for you guys to keep an eye on. Watch out for this one. Again, like I said initially, watch out for a possible test of the 71.65. Let's jump into one crypto quickly, and that's Ripple. Now the Ripple, I was covering this one recently in one of my videos, and I was talking about this potential move here. So we can see yesterday we saw this one traveling lower here towards the 0.43 zone, approximately there, but kind of never reached the downside resistance line that it broke out of last week, and certainly we can see that it kind of straight away reversed and closed the day in the positive with a positive candle. So now basically this arrow here, we can get rid of this for now. The only thing is here, guys, you need to watch out for is a possible formation of the flag. I do apologize. So this is something could be a case of, and of course, like I say, for now, just keep your eyes on it. Certainly it's a bit of a weird one here with the upside here. It's a bit tricky, but that's why I'm saying this, it could be a potential one. So because we have a nice pole here, so this is where the price could trade around for a little bit until we start squeezing. We see this crypto start squeezing, and then maybe we could see further continuation to the upside. So for now, of course, this is a very long shot. This is just an idea for now, but again, keep your eyes on it, because this could potentially work out. But for now, overall, we still remain bullish on this one, given the fact that we have broken this downside resistance line. Let's jump into a few pairs. Now the first one I want to touch on is the euro dollar. Now the euro dollar is at a very tricky spot here. Okay, so overall you can see that it continues to climb higher here. Well, overall, I mean overall from the shorter term perspective, I would say. So from the 10th of September, it continues to push higher on nicely on this upside support line here. Certainly it hasn't been broken yet, and the question here is, will it actually get broken, or will we see a continuation here to the upside, or actually if we get a break here we'll move lower? So for now, be very careful, because as you can see, the pair is kind of struggling to overcome this 117.90 and the 118 levels, so approximately there. So it's kind of struggling to close above that. So at the moment we're very cautious here, even though it's still within the above this upside short-term upside support line. Still there could be some weakness kicking in later on, but again, for now we're just going to stay neutral and just observe this, how it's going to trade. And if we do get a nice close above the 117.90 and eventually above the 118 level, now this is going to be great, because we could start aiming for some higher levels like 118.40, excuse me, and 118.40, and then we could start aiming maybe for even higher levels like the psychological 120. But of course that's still a far way to go, but nevertheless keep your eyes also on this downside resistance line taken from the peak of the 19th of February. So basically at the moment there are some good levels to watch, and but from the very short-term perspective, be very careful, because we could see maybe a surprise move here. Keep your eyes, like I said, keep your eyes on this upside support line, because if we do get a move lower towards it, now this is where we should remain cautious, because a break below this upside support line and a close below the 117.35 zone, this could open the path towards slightly lower levels here that we saw in the beginning of September. We could start aiming for the 117 again, and then the 116.60. So for now, again, like I said, be very careful. At the moment it's just too tricky. So like I said, for the upside, for us to start getting comfortable with the upside, at least for the short term, we need to see a good close above the 117.90, or even actually better, the 118 level. So and on the downside, a nice good close below the 117.35 could lead to further declines here, at least for a little bit here, maybe towards the 117 initially, and then 116.60. So again guys, like I said, be very careful with this one. Even though it's a very interesting pair, still, like I said, we could get some surprises. Let's jump into quickly GBPUSD. Now GBPUSD, after Friday's decline, you can see that the pair continues to, well, it's still trying to recover the losses of Friday basically. So Monday and Tuesday here, we had some bullish candles forming here, and now on the looking at this daily chart, we can see that it's currently the rate is resting around the 100 EMA here, shown as the green line. And of course the big question here is this going to continue pushing higher, or are we actually going to now reverse back down here? To be honest, keep your eyes on this 132.15 level. Now currently, as you can see, the rate is sitting at around 131.70, but again, we could see a follow through here. Still, we could see a climb higher towards the 132.15, and if that holds, and if this continues to hold the 132.15, now this is where it could become interesting for the bears again, because we could see maybe something like this happening, where they could start jumping in here and potentially driving this pair back down, initially towards the 131.20, or even actually towards the lows of Friday. This very nice good area of support here near the 130.25 zone. So sorry, 130.55. Sorry, I do apologize. So something like this could be possible, guys. Certainly, like I said, for now, be very careful with this one. If we get a break above the 132.15, again, stay cautious. Yes, it could potentially move higher, but again, the upside could be limited again. Either we could hit the 200 EMA here, shown as the black line, or reach the last week's highs near the 132.95, or even actually it was close to the 133 zone. So we could potentially hit that one, but only if we get a break above the 132.20 zone. So sorry, 132.15 zone, something like that. So keep your eyes on this, guys. I do apologize for the crazy arrow here. So yep, something like this could be possible. And the last pair that I really wanted to touch on, and that's NZDJPY. Looking at this daily chart here, we can see that it continues to push higher. Well, at least it's trying to. We do have this steep upside support line here running. So for now, of course, it dictates the direction, and we're going to stay very cautious here. Even though we're still more to the bullish side, we need to see a good close here above this 75.45 zone in order to kind of consider further acceleration to the upside, especially aiming for the 200 EMA here, or even slightly above that, the 76.30 zone, which was marked here by the highs of the 1st of August. So something like this could be possible. Again, like I said, be very careful here. So either for those who are more on the cautious side, like I said, you could wait for this potential close here above this 75.45, and then of course, yeah, like I said, aim for higher levels, at least towards the 76.30, approximately there, of course. On the downside, well, even if we get a break here below this short-term kind of steep upside support line, still a good confirmation for further declines could be a move below the 74.75 zone. Now this is where it could become interesting for the bears, because we could see something like this happening, where a break below this level could lead towards a test of the 74.35 initially, and then maybe the 74 number itself. So keep your eyes on that one, of course. Like I said, there are some good levels to watch, but at the moment, at this point in time, just looking at this chart, it is looking more bullish than bearish. Okay, guys, I hope you found it useful. Thank you very much for watching and listening. And if you want to join me later on today and at my Traders Tea Time, and that's 13:15 GMT, 14:15 British Summer Time. But for now, thank you very much, and bye-bye.